Welcome back to the channel, guys, your home of hopium-free crypto and economic market cycle updates, also the occasional triggering title. But you're here for the major content, the stuff that is actually important. On top of that, I hope you had an amazing day and had a fantastic weekend, thanks to the guys in Greece. I just did a meetup yesterday, had an awesome time. If you guys are in Europe, make sure you head to Greece. Beautiful this time of year. All right, we are hitting up Bitcoin, looking at the potential setup that Bitcoin needs to get above the high volume traps, which we've looked at on the channel before. So we need to go back and revisit these to give us significant price targets for this current BTC pump that we are seeing. I am sure I'm going to get people saying this is a pump. We're up 3.5%. We've broken through 24K again. These levels are the most important areas, along with 50% levels, but really, really high volume gotcha trap bars is what we need to cover. Now, most famously is the one that we looked at in May of 2021 before the market broke down into that significant short-term bear market. Now, we covered this on the channel back at the time. The bar was actually in April, and there was a lot of noise in May. If you remember back that far, if you were in the market at these peaks in May, for the market to go to $80,000, $100,000, you name it, people wanted it to go there. But on the channel, if you remember, let me know in the comments down below as well while you're clicking the likes and subscribes. If you remember this point, I did a video saying the market was about to break down. That was in April, on the 18th of April. We can see we had 3 days down. It just broke that day. That was the 3 days down from the all-time high. Now, it did happen a little bit faster than I had expected, but nonetheless, we got the breakdown. This was the significant bar on the 18th of April. So this is going to come into importance for this entire video and for your future trading, short-term, long-term, whatever it is you're doing. This really works fantastically well. It is watching what the market's doing and looking at the market sentiment for any market that you're following, Bitcoin, crypto, stocks, ETFs, whatever it is that you are tracking, using a chart, because the charts always are going to tell you what's going on before the news and give you those signal prices to look out for, along with time as well. 18th, significant volume down. Remember, you don't know what's coming on the right-hand side of the chart. All we know is that this is what we've seen, and we don't know what's coming next. This entire market had been up for a very long time. Huge volume that day compared to anything we'd seen for the past month and a half. Of course, there's a couple of extra days back here, but this is a month and a half, and we saw the highest volume that had been. So what I did from that point is say, the market needs to recover above the top of this price. Now, this comes from Wyckoff, so it's not just a made-up rule here from some random guy on the internet. This is a part of Wyckoff analysis looking at this particular bar, and the peak of that was $60,429.60. So for a round number, I was looking at a nice, easy number for people, $60,500, but you could have said $60,430. Okay, so 60,500, and I was adamant that if the market could not recover to 60,000, the top of this bar, the top of that bar, 60,500 as the round number I was using, then we were not going to see $80,000. We were not going to see $100,000. It was not going to happen for this part of the move, this whole journey on the way up, and we were unfortunately going to go lower. But because this was the most extreme time of the market with the most amount of bullishness that we had the most amount in April, not in the all-time high in November. No one wanted to believe it or hear it that we were going to potentially break down. I don't have the crystal ball much as I'd like to believe, but the market was telling us that it was not ready yet, and the extreme hype through May and with prices not going up any further really showed that the energy had stopped. That's why I'm looking at these particular bars, and you can see that the energy begins to wane out as the market heads up higher. It could not get there. I was doing some videos on other major cryptocurrency channels, and they were adamant of $80,000, $100,000. But this signal really, really helped keep a lot of people safe in the market. And then from that point, it just fell a few $100 short, $900 short of that top. And from that point, we crashed all the way down to May. And if you remember this significant day here on the 19th of May, a live stream for about 5 hours that night. So yeah, love to hear from you guys if you were following the journey from that long ago. Now, that's to give you an idea of what this particular tape reading, this bar reading signal is, Potentially if you're using candles, you can do a similar sort of thing. We are looking at the volume, we're looking at the bar, looking at the range of each of these in comparison to the previous periods. So you can see that it was a very significant range in price and volume as well. We want to know that the volume because that is telling us how much is being traded on that day. All right, so now we move forward. The market wasn't able to recover. That basically gives us a signal that we're probably, not confirmed, but we're probably going to go lower, okay? So that's how the trading works. So we're just making up of risk and reward and the probabilities of the market going up or down. The probability of it going up was not high, considering it had just started to break down and then formed this next bar that broke down again on significant volume, and the market couldn't recover to the top of this bar of the 12th of May as well. The energy was still extremely high for people thinking that we were going to go to $80,000 to $100,000. This is what was happening at the time in terms of the market sentiment, but the chart was telling us another story. Breakdown occurs, and unfortunately retail got in at this period and the market broke down, and they probably had to sell out at a 50% loss because of the fear, and that's absolutely warranted. You know, if you're first time in the market and you're losing 50%, it's pretty rough, very, very rough. So let's move forward and just see this signal, how it happened, to give us a signal of the downside, and then also if it breaks, do we get further upside? So September 2021, you can see significant volume compared to the previous range, big bar down. So price bar, it's a significant drop, significant volume. Let's look at the high price. Could the market get there? It eventually did, and of course we had more upside. So it's an easier signal to play if you wanted to go long. So it's basically just trying to take the risk out of the market, not having to, as I always say, don't time the exact bottom or the exact top. You just want to have some confirmation signals to let you know that probably the momentum is going to start to shift with us to the upside. So let's look at this next one here. You can see the market dumped. This was all the Evergrande period, Evergrande, whatever you want to call it, in China. Things that had to blow up and the market basically had to go down. It was all over. But you can see this dump bar happened here, significant volume compared to the last couple of weeks. The market got there in price, recovered, good volume, closed above it, little test, and away she went. And so it got back above the extreme fear. All that's happening here is that investors early on are finding strength in a market where everyone else is finding fear. And that tells, and we're finding that, they're telling us that on the chart before the news tells us. The news is not telling us that things are good. The news was telling us that everything was extremely bad. So I'll get into my longer term pictures as well, but we just want to look at what's going on short term and then the long term. My long term has not changed. I'm still remaining in an accumulation period. I'll look at that as well, but I think it's just important to bring up because some people get a little confused when it comes to short term versus long term. All right, so let's skip through these signals here a little quicker. Significant volume, breakdown, it broke all of these lows here. The market never recovered to this high. You get the deal. It went down. Again, the breakdown underneath these lows, significant volume is what I'm looking for. It has to be significant volume. Didn't recover, and away she went down again. Another significant one, down she went. Another significant bar, look at the volume compared to what happened previously. Didn't recover, down she went, down she went, down she went. We got a reversal. So it went down after that. We got a reversal here, and it held the market up. All right, so if we do get it to break the top, it holds the market up for some period, and then we look for the next confirmation to start to build the campaign to head higher. All right, and that's what happened. That's what happened here. We had the higher lows come in, we had the big volume come in on the lows, and the market headed higher. It wasn't anything significant, but it wasn't just the falling out of the sky like what happened on every single other occasion where the market wasn't able to recover to that price. Okay. So again, market broke down, significant volume compared to the last periods, and away she went. Away she went, away she went. Now it brings us up to nearly present day. We have one more bar here, significant volume, big crash, and we are climbing our way towards this bar now. So with that in mind, what do you think is going to happen? I think if we're able to take out this top of the bar here, 26,850, so leave that as your round number, 26,850, maybe 26,009, just a nice round number there. Then it's going to hold the market up for a little bit longer, and we'll start to at least put in some sort of pattern where we can head to slightly higher prices and just start to climb higher. This might sound like it goes in direct contrast to the yesterday's video, the video I did a couple of days ago, looking at Bitcoin is entering one of the worst months in crypto history. this is short-term versus long-term. And so when I'm looking at short-term, this is what I want to see short-term to get at least the trading opportunities happening. So we can make trades, whether you're trading leverage or spot trading, you still have a fair bit of percentage to the upside here. But of course, we want to see the confirmation of the break from that point. And then we can possibly see altcoins, cryptos, start to head higher as well. So we get the confirmation from Bitcoin, and then altcoins do their thing, and you get that trading opportunity. So we're just trying to pool the probabilities in our favor. That's it. And we're just trying to find out more confirmation from the market to tell us, yes, we are a little more bullish than we were yesterday, last week, last month. Now is going to be the time that we could potentially trade some cryptocurrencies with more probability that we're going to get profits rather than a lot of churniness. Okay, so that's one thing there. Now the video, yesterday's video, looking at the worst months, I still stay true to that, is the fact that August, September hasn't been a fantastic time. So let's try not to get too confused here. If we can break that, maybe it happens in August, maybe it happens in September, it's still a good thing for the macro space to say that we are potentially churning through this bottom period. But bottoms are very hard to continue to trade because you have potentially a tight trading range. And so you can see that here, these were some of the bottoms in January, February, March. You had a little bit of a run on here from early mid-March into late March. There was a potential period of trading, but the rest of this was very choppy, even though it took out the signal. So maybe we get something similar. Let me throw this on to about this period. So you can see the period may be very similar to what we had in February and March, and the tops get broken, it takes out the high of that bar, it holds up, gives us enough opportunity for a few trades. But looking at what I'm talking about with the worst months, the August, September's, we take this out, go back to a monthly chart. August and September in history, all these yellow arrows, have either been down, so they are down months for traders, so they're a trap. If you're a long-only trader, can potentially be traps. They are tough or trap situations if you are a trader going long and short. And there's the rare opportunity, which is why it's tough, but it's not impossible. The rare opportunity is to be a short-term trader, because in that August-September period, there's been a couple of bars where the market has gone straight down. Like you could see in 2011, August straight down into September. Then we had a bit of a churny period in 2010. In 2012, August spiked up, and then September didn't really do anything. So the energy in the market is just not really there in history when it comes to August and September, which is why I said it's one of the worst months for crypto. And then later edited the title to be Crypto Traders with the data analysis, looking at that, just to try and make things a little bit clearer, because people are getting so triggered at that title. That in history, if you're short, you can do it. But most people don't like to trade leverage. They don't want to trade short. So it's going to be a tough period for anyone going long. You can see it again here. Here are the yellows. This is August, September. Nothing much happens, dumps. August, September. It spiked in August, dumped in September, rebounded. It's a tough period because it's a lot of churn up and down. New people get caught in those traps, and then they lose money in the whole churn. The only time new people make money is when the market's just going straight up. 2018, July up, August down, September not much, it went down slightly. It's a churn. August here was down, September down in 2019. So shorts were winning. August, basically the move was over and September dropped. Shorts got something. Everyone else got churned up. So you can see it's just churn, chop, August, September, worst months, crypto traders, if you're trying to do this. If you know what you're doing, going to be a different story. August, September, we went up in August last year. September, chopped straight back down. We see this. It's a tough time if you don't know what you're doing. So for whatever reason, people getting triggered over titles, I'm trying to explain the best way I can so people don't lose money in the market. I've been doing this for 12 years, over 12 years now in trading, 16 years investing. Unfortunately, people continue to make the same mistakes time and time again. That's part of the learning process, but hopefully we can grow out of them. And I'm hoping to give you as many tools and keys that you can use to take away and put into your plans to hopefully keep yourself safe in the market and, best case, just not lose money. People take that for granted. I talked about that with our members today. People take for granted just not losing money and saving money in the market as not enough. They need to be making millions or billions of dollars in the market, thousands, maybe millions of dollars. But at first you lose, then you lose a little bit less. Basically the learning process is you lose a little bit less. Then you start to break even, maybe save some money, don't make stupid decisions on trades, Then, if you stick with it long enough, you start to make a few profits, a little bit here and there. It starts to, your trading starts to turn around, and then you turn into the bigger profits. So it's like a big learning circle. The same thing happens with anything in life, whether you're training or your education or anything like that. You start to not make so many stupid decisions, stupid mistakes in your life, and then you start to break even, and then you start to move forward. So that's all I'm trying to do here with these videos. Unfortunately, sure, I use some bad words at times in the titles, but it's a bear market. Let's enjoy it, and I'll probably do it in the bull market anyway. It's titles, it's YouTube. Just take what you can from it. Go away, learn what you want from the information I've given you here on these videos, and I hope you make the most out of it. Save money, make money, do your best, smash likes, subscribes. I'll see you guys at the next video. Hopefully you got a lot from that, just looking at these potential signal tops and what I want to happen from the market, looking at the probabilities. If we can break through this, then potentially the churn comes, but we need to get through these significant bars before we get way too excited. So we could see that little peak up and break it, all right? Just remember this is the possibility, but then maybe we head back down and test some of these prices between 17 and about $20,000. It could take some time, like I showed. August may head up. We still have another few weeks of August. September may also peak up a little bit higher. Maybe we head into the 30s, right? But then the trap, eventually we have to come back and retest some of those prices. We have to get a correction. That's just what markets do. And maybe that trap is people are just getting sucked into the market, and then eventually it sort of fades and falls back out like it has done for the last 12 years. And this happens in all markets as well. Sucked in and then spat back out. All right, guys. Thanks again for your attention. Hope you have a fantastic day. I'll see you back here on the channel real soon. So make sure you're subscribed. Have a good one. Peace out.